Hello everyone, welcome to Simple Trading Style, and today we are going to talk about how to use 5 rules of risk management for simple trading style. That's a very interesting topic, and I would say it's the most important topic in the trading because these 5 rules will make you profitable. Without these 5 rules, you will never trade or will never be profitable in the trading. That's the most important. People should start from it and should use these rules every single trade. Every single day they have to follow the rules. Let's move to the rules. Simple trading style, 5 rules of risk management. First, never lose more than 1 bar. And you will be in this game forever. Because if you lose 1 and gain 5 or 10 or more, you will always be profitable. 1 bar, it's a small loss. You have 1 to 5, 1 ratio, 1 to 5, 1 to 10, 1 to 7, 1 to 20, 1 to 2, 1 to 3, but always more than 1. You will be successful forever. Second rule, very important, never add to the losing position, losing trade. If you're wrong, your stop should kill the trade. Never add to the losing trade. It means you're wrong. If you're wrong, don't get even bigger wrong. Don't get even double wrong, triple wrong. But people like to add to the losing position. That's what we have in the stores, right? Buy one, get one free. Why do you need one free if you do not need it all? But you're going to buy to get one free because you want to get one free. Okay, number 3, very important. Always use hard stop. Always use stop. It depends on your style. I use 1 bar stop or 1% stop. You can use 2 bar stop, you use 3 bars. It depends what kind of time range. If you're using bigger time range, your stop should be bigger. If you use a smaller time range, your stop should be smaller. Depends if you use 1 minute, 5 minutes, 1 hour, 2 hours, or daily, or monthly, or weekly. It depends. These major 3 rules, and an additional 2 rules, number 4 and 5, to be profitable. Number 4, once it moves up 2 bars, move your stop. Don't lose any bars. Don't lose any bars. And number 5, once it moves 4 and plus and 4, 5, 4, 3, 5 bars, move your stop. Move your stop, and in this case, your trade will be successful, will be profitable. That's how it works. Just do screenshot and follow these rules every day. Now let's move to trading view, and I will show you how it works. If you want to know about TradingView setup, just go to the description. There is the link about TradingView setup training and other links about all my trainings. Very simple setup. I'm using only one indicator. One indicator will make you profitable. I'm using daily time frame. For swing trading, I'm using daily time frame for entry and exit position. For intraday, I'm using 5 minutes and 15 minutes time frame. Also, it's a Tesla. Tesla, very popular stock, right? And I will show you how it works on Tesla. Let me briefly mention about my setup. I'm using moving averages. White line is SMA 200, yellow line SMA 20, red line SMA 10, and green line SMA 5. Buy and sell script indicator. That's all. That's all you need. And remember, trading style is very simple. It has only two items, 2 bars, green and red. It has 2 colors, red and green. It has 2 actions, buy and sell. It has 2 results, profitable or negative or positive, right? And it has also emotions, 2 emotions, fear and greed. That's all. If you follow the indicator, this indicator, don't follow your emotions, because your emotions will destroy any trade, any profitable trade. Follow the indicators. Indicators do not have emotion. That's why you will be successful if you follow the indicators. Okay, rule number 1. First, you have to define the position. If you can go and learn from my, let me briefly mention, let me show you how it define the position, right? To define the position is very simple. You see, when bars do bearish crossover over MA5, 10 and 20, and bars below MA5, 10 and 20, it is bearish trend, right? It's a bearish position over here. You see, bars below MA5, below green line, below red line, below yellow line. It's a bearish trend direction. When bars moved into bullish crossover, they moved above yellow line, above above green line MA5, 10 and 20, it is bullish trend. That's how it works. Very simple. Bars below MA green line, bearish. Bars above green line, bullish. That's how you do entry and exit position. Entry and exit position you do this way. Look at it. When MA5 green line does, in this case, when it did bearish bullish crossover, right? You see MA5 did bullish crossover, this green circle, bullish crossover. It's a buy signal from the script, right? And what I did put stop, rule number 3. My entry was over here, this bar, and I put stop below. Next, you could put stop over here just to be secure, fully secure. I did put stop over here below MA5 green line, because line can be support also, remember it. Like here you see MA20 was support, it bounced. MA20 was support, bounce, resistant, I'm sorry. Here MA20 was resistant, here MA20 was resistant. Let's not make it complicated. Remember, simple trading style, trading is very simple, it's not complicated. Traders make trading complicated. People do everything in life complicated. Okay, let's go back. MA5 did bullish crossover, right? Green circle. We did put stop over here. It means if we did our entry was wrong, market will stop and I will lose only small 1 bar, right? Just small. But it didn't, right? It did because MA5, it did bullish crossover. It was right entry. I did right entry. It did bull around, look at it. It was when it moves over here about 20, about yellow line, because when MA5 did bullish crossover over yellow line, for me it's a full confirmation of bullish trend. What I did, I moved my stop over here, right? It's a rule number 4. I moved my stop. And my move must stop. If anything happened, if market change direction, I will be profitable. I will do rule number 4 and number 5. I will be profitable. But it moved and moved, and I moved my stop because this is 1 bar. It's 1 day, right? Like every day I check, I move my stop, I move my stop, I move my stop. I move my stop over here. Market was here. My stop was over here, and it was stopped out. I was stopped out over here, right? I was stopped out over here. That's all. And I didn't do anything, and I was waiting for the price action to change direction. And MA5 did bearish crossover, right? Finally, we received sell signal from the script. It's a signal for the entry, but MA5 did bearish crossover over here. What I did entry because MA5 did bearish crossover. I didn't see it. I didn't see this one yet. That's what was my entry. Entry for sell, for short. This was long trade. This is short trade. And what happened? Market moved down and moved up, and my stop was over here. My stop was over here, and I was stopped out. I was stopped out, right? It means I lost this 1 bar. I lost 1 bar. I lost 1 bar. It happens. That's why we are using stop. Rule number 3. We need to have that stop because it happens. It happens. And what I did again, I saw it because for me it's a bull trap because MA5 never did bullish crossover back, right? MA5 still below 10. in the bearish trend, in the downtrend direction. And I did re-enter again over here. When MA5 did close to 20. I did re-enter again. I put stop over here. I moved my stop over there. And market moved down. Market moved down. And I put stop over here later on. And I did stop out by this bar. That's how it works. I lost one bar. And I gained how many bars? I gained 1, 2, 3, 4, 5 bars. I gained 5 bars, right? That's how it works. That's how it works. Very simple. You can follow these rules and you will be successful. You always have to use these simple trading style rules. Same like over here, right? You see MA5 did bullish crossover. Green line did bullish crossover over 10. Green line stop. My stop was over here below. And it didn't touch the stop. My stop was never broken again. It did move up. I didn't put any, when it even moves 1, 2 bars, I don't move my stop. I can move stop, when I see over here, I can move my stop like this one to break even. My entry position was here. I moved my stop over here. When it touched 20, I usually prefer when bars moved about 20 for me. If it's about 20, for me, it's a full confirmation of trend. When I moved my stop over here, at zero line, for me, it was zero loss. It was zero loss trade. And it did move up. It did move up. It moved here. I moved my stop like this, right? From this level, I moved to this level, and like every trade you move some way, but you'll have to let like 4 or 5 bars move up. And when bars above, look at it, bars above 5, it's a fully bullish trend until bar cross the 5. You see this bar cross the 5? Okay, something going on. Just put stop over here. Okay, it still moved up. Just move your stop over there. Move your stop over there, right? And but price action still moving up, When I saw this bar, it's another rule, right? When this bar is so far from MA20, for me it's a disconnect. When bars disconnected from MA20, because at this moment it was over here, right? This disconnection, it's a huge disconnection. And I know this rule. When bars disconnected from MA20, from MA10 and 20, they always wants to come back to connect back to 20. That's what they did. I did move my stop over here. And what bars? They did sell off and they moved back to the 20. Back to the 20. That's how it works. Very, very simple. Just follow my rules, follow my trend, and you will be successful. Thank you so much. Let's move to disclaimer. I'm not a financial advisor. This video for educational informational purposes only, and remember, for educational purpose we are using paper trading simulator. Don't use real money, just use paper trading account and be constantly successful. Thank you for watching Simple Trading Style video. I do publish daily, weekly, monthly updates for stocks, ETFs, indexes, and cryptos. Please subscribe for YouTube channel, click like button to support the channel. I really appreciate all your efforts. Thank you so much and good luck. Bye now.